Hi guys, welcome to Compound to Freedom, the channel where you will hopefully see me progress through to riches based on compounding. That's the goal. And if I can do it, I'm sure you guys can do it as well. So this is just a general blog, and if it's the first time tuning in, I hope you get something out of it. So let's start with Carnival. I'm going to go straight into it, and I am quite impressed for the fact that we have an ascending triangle. Now you can see the ascending triangle that I drew from the previous video. Check it out if you haven't seen that. But here, the ascending triangle actually did break out. Massive 4-day, well actually 3-day rally. Just in this section, just here. And sorry about the crosshairs. So that ascending triangle really was a confirmation for me that Carnival is going to get up. Now, the main reason this happened is the CEO came out and stated that Carnival has a lot of bookings already for 2022. So things are looking good in the earnings front. You have to remember that Carnival was a dead horse that was flogged. It had been massively sold off. So this is more like catch up. This isn't a play where the company has generated a new product and it's going to be astronomical earnings. Carnival's catching up of where it should have been because of COVID, and it was one of the hardest hit shares that hasn't caught up. All the tech shares have now caught up. All the cyclical shares that benefited from COVID have caught up, and now they're plateauing, peaking off. Carnival hasn't caught up. So BP was interesting. They had a massive profit increase. I think it was something like 37% of their operating margin. I didn't check the figures completely. I'm not an analyst. Plenty of information out there. I just skimmed a brief Google search. Yep. Because predominantly I'm chart based, right? And then I'll confirm it with if I'm interested in more information. So if I was going to invest in BP, I would check what the results were. But there's been significant rise up. Hasn't caught up to its pre-pandemic level of around 500 here. However, it is gone on a slight increase from its boost in profit margin. It may continue on 360 or 370. Could be a 10% swing up. It may again hover in a range. And that's sort of what has happened since February. Centric is here, has had a big rise up. Almost 10% or more from around, it has from 51 pence all the way through to 57. So where Centrica goes, I'm not sure. However, it has gone up to this support line. I would think Centrica possibly would go even more, maybe to 60. DS Smith, this thing has absolutely tanked so much that the momentum is completely off and it's heading negative territory in the RSI below 30. Also, the amount of candlesticks here that are sticking to the bottom of the Bollinger Band and well below the moving average, this thing possibly has more to run. I am going to say that this may resist around this level, which is 360. It's currently around 400. It may resist at this point too, which is around 380. There's probably a 5 or 10% resistance point with some up and down days for DS Smith. Okay, so here we have the S&P 500. A bit of alarm bells possibly to ring. If you have a look here, it's fallen below the 100-day moving average line, which is this thin red line here. It had an up day on Friday. However, it's completely peaked off and is cleaning the lower Bollinger Band lip. Not a good sign. Longer term. Has this happened before? It has. It's happened, if I have a look at this graph, most noticeably here. And this was around February this year, where it went from highs and clean to the lower Bollinger Band. However, the key difference was it was above the 100-day moving average. If we go back to September and October, let's go 1 year, 6 months. Let's get the candlesticks out. If I go to from about September through to October, September had a good inclination up. At this point here was going to continue on. But look what happened. It touched the bottom twice and fell. And this acted on a support. Breached the 100-day moving average. Go then from November. And it's continued on a very, very steady incline for almost 12 months. Conditions are good. Money is cheap. People are wanting to be in the market. So I believe that it's definitely just a bit of noise at the moment. Yes, be mindful. But what's really going to push people to get out of the market is when interest rates start to rise, inflation goes through the roof, and the US economy really has a lot of debt and poor productivity. That isn't the case so much now. So the S&P is going through a bit of a funny stage at the moment. The FTSE, let's have a look. All right, the FTSE's gone flat, which is not what I thought would happen either. And it is range bound right now across both of the high and the low point. So I believe that because of this range bound action, it will stay in this range. It has to break out either in a positive or a negative trend. I'm expecting it may rise just for the reason of where we are. If we have a look at the last 3 years, the FTSE has caught up considerably from March, where it was down unbelievable at 5,500. It's now at 7,000. Went back down to about 5.5. It may come back to 65, 66, but if it does, it may go up, or it may just stay the same at the moment. It is not far off from actually its pre-pandemic high. The US has actually surpassed that now, and well and truly is going on the up range, but it needs to at least touch and hit around 75, 7,600 to say that things are definitely looking like a continued range, a continued trend on the up. We can see that mining has taken a tumble because of potential demand for future minerals from China, the property saga of Evergrande. Some profit taking was had and some money was taken off the table. And so we've ended up with a bit of a slump. We're at 7,600 in August for the S&P 200. We're now down to 72. It's 400 lost. It's about 5% at the moment. Where will we be from here? Well, there's two resistance points. There's one at this point here. There's also one up here. I don't know where the Australian index is headed. My feeling was that it would reach 7,800. I still believe so, but I don't know if it's going to decline further and then hit back up, or if it's going to go range bound and then hit further. We'll just have to wait and see. So I hope you've enjoyed this video today. Subscribe if you like. Send me through a comment. Still interested if the first person that can watch this video can make a comment about how they're feeling of the markets. Happily to respond. Okay. Thanks, guys. Have a good day. And subscribe.